everybody, and welcome to Super Stonk Bros, episode number 11. Today, we will be talking about the recent announcement by Jam City that they will merge with DPCM Capital Inc. to become publicly traded via a SPAC. So the combined company will have an enterprise value of $1.2 billion, and proceeds are expected to add approximately $115 million of cash, including from a pipe of $100 million. Led by Netmarble, and currently Netmarble owns the majority of Jam City, I believe like 60% or something like that.
Yep.
And further, the combination will also include an agreement to acquire Canadian-based mobile game publisher Ludia from Fremantle for $175 million. Now, I think, again, this is one of those situations where Steve and I can add a little bit of additional context. Some of the games that Ludia is working on, story-based games, Steve has a lot of context about. Also, I was the SVP of games at NBC Universal, so a lot of the Ludia titles, I worked with them before. I actually know all the data behind all those games. So there's, to some degree, I'm going to have to hold back a little bit in terms of how much I talk about Ludia, but certainly on the Jam City side, happy to talk more about prospects for their business. And we can talk about the publicly disclosed data and things of that nature. So
absolutely. And Joe/Macro, host of the show. I'm Steve Palley. Those of you who are just tuning in. Yeah, this is kind of an opportunity to look under the hood on kind of a smaller SPAC. It's interesting, like Jam City is a well-established company in our business in mobile games. And we've been covering sort of mobile entertainment recently, but it's not of the magnitude of a Zynga or an AppLovin or even a Skills, right? It's kind of, I don't want to say small ball, but it's a smaller publisher. It's well established. But I think it's really interesting to look at what these guys are doing with the SPAC and kind of try to understand why they're doing it and like what the hope is for the company. So we're gonna delve into this sort of the larger strategy of SPACing it out here. Using what we know about Jam City. I have a lot of friends at Jam City. I've actually interviewed there in the past when it was SGN, like way back in the day.
Oh yeah, that's quite a ways back, but
quite a ways back. And so yeah, this should be a good one anyway.
Yeah. So I'll go ahead and share my screen so we can kind of show the audience a little bit more and give them more context about the company. But we could start by talking about, who is Jam City, what is their business, and what does the combined entity look like? So first, you can see here that this is from their presentation on the Jam City website, but you can see some of the key titles here. So Cookie Jam, Panda Pop, Genies and Gems, the Harry Potter game, Bingo Pop, which they acquired from another studio that Steve and I are pretty well acquainted with, Yukon Games, based in Canada. They also acquired the Disney Emoji Blitz game and Jurassic World Alive, and Jurassic World games I'm very familiar with, as I said, and won't speak to too much.
Yep.
Then they've got some games coming up in terms of the pipeline. HGTV, a Disney Pop Town, Lovelink, a DC game, an Avatar game, a Star Wars game. We can talk about that in more detail later. I am a little bit worried about these titles in the sense that when you look at the current portfolio on the Jam City side, it's largely been relatively casual and not mid-core hardcore.
Yeah, we're looking at bubble shooters. We're looking at match 3 games. Hogwarts Mystery has some more core stuff in it, but not really, I would say.
Right.
But yeah, casual games, more kind of female focused, I would say. Certainly HGTV down there in the lower left. Lovelink as well. And then you're absolutely right. You look at DC, Avatar, Star Wars, Bam, 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 more male focused, which is kind of an interesting pivot.
So in terms of the mix of the games, you can see that $570 million in total bookings, and you can see the mix in terms of the games that are contributing the most revenue, or at least bookings. Harry Potter is one of the biggest games, and then the other games here. You'll notice that, and especially with the acquisition of Ludia, they're going to skew a little bit more licensed IP relative to owned IP, but this does skew them more towards a licensor. And I think that might actually play to their favor in the sense that, okay, now you have this entity that specializes a little bit in more licensed versus original IP. The difference there is that there's two ways of thinking about that. First, in the impact of IDFA deprecation may lead to companies that are able to work with licensed IP having a little bit of an advantage relative to companies that don't.
That's a great point, because it's a form of brand marketing, right? And it helps when you can't do performance marketing. So
right, leads to a lot of additional organic volume, and so that's a hypothesis. That's something that we're going to have to see how it plays out with. As we're basically starting to roll out IDFA deprecation currently, and it's the impact is still to be felt. But
yeah, and again, that's Apple's major privacy change that breaks performance advertising for mobile entertainment, and is a huge deal for our business.
Right, and you also have to think that some of the companies that may be potential acquirers, because as we see consolidation, not just in gaming, but from an entertainment perspective. Now, there's been a lot of rumors about Netflix expanding its ambitions as far as, rumors and reported news, actually. Companies like Netflix, what will Disney actually do? Now, Disney has kind of gone down its own game studio path and shut it down. And the joke is every 5 years, they'll shut it down and start up internal games division. And so whether it's Disney or Netflix or a big entertainment type of organization, like having experience working with licensed IP also helps from that perspective.
Right. Now, makes you a more attractive prospect to be acquired. Right, Joe?
That's right. Yeah.
Got it.
And so here we see kind of like the revenue mix. This is from Sensor Tower data. And so this just kind of provides a little bit more of a trend line against kind of the bookings and the breakout that we see here. And you can see that Harry Potter certainly is a big factor here. Now, one of the things you should note is that at least in 2019, that there has been, this is net revenue, right? What seemed to be like a relatively slow but steady decline as far as revenue is concerned until April of 20. Now, this is something that Steve and I used to have a game-related podcast that I commented on very often, which is that COVID basically saved the ass of a lot of game studios that were basically in decline. COVID came and really just like it was for many game companies the best year ever in the history of mobile gaming, right? And like it was just like tremendous boost to downloads and revenue. You can see that impact also had an impact on GM City's business. But the question then is like, now that things are getting started going again, once we get back to, business as usual, I personally believe that the baseline is going to be higher in terms of just gaming, mobile gaming more generally. But I do expect these numbers to start to decline. And then are we going to see that decline that we saw as with GM City prior to COVID, right?
Yeah.
Here we're seeing, this is the download data for GM City, and we saw that similar trend. Things were relatively trending downwards until some new game additions. You see here, they were able to pick up some assets from Disney. I don't think that game is super profitable. And then this is another concern I have about Jam City. And by the way, we both Steve and I have a lot of friends at Jam City, so if you guys listen to this, don't get mad at us.
Love you guys. We're on the outside looking in. Yeah, this is every company has advantages and disadvantages.
Right. But you can see here also just like the trend in terms of downloads as well, pretty steep decline, right? Mm-hmm. Looking at Ludia's business, and again, I'm just going to show you the public data here, is that from a net revenue basis, they're kind of going okay. And then of course, kind of like also somewhat trending downward, but then COVID-19, boom, everything improved. Now what's going to happen in the post-COVID, back to normality period, as well as post-IDFA deprecation period?
Yeah.
Who knows? But I would say that I would be a little bit worried in terms of growth. Is this really a growth story? I don't think so, personally. And then if you look here, like Lovelink, and this is something Steve can talk to you about, we're seeing, at least from a net revenue perspective, things are definitely heading downwards.
Yeah.
This is downloads data for Ludia, similar, definitely had, actually, I'm kind of surprised I didn't see a bigger positive impact from COVID here.
Yeah, if you look at Ludia's revenue chart, you can see that it actually didn't really go up that much. It just got it back to where it was in like mid 2018, right? And that was with a new game. So it's kind of like, that's kind of troubling, I would say.
Right.
As far as Ludia goes, this asset that they just picked up for as part of this reverse merger, this SPAC going public.
And so, I mean, it seems like they've got a lot of, relatively long-lived games. Their new game here, Love Link. I don't know, Steve, what's your outlook in terms of other story-based game titles?
It's tough. It is a tough segment. We do operate, I work for a company that does operate in the interactive narrative space, which on mobile is really heavily focused on like romantic fiction. It's very female focused. And, we operate one of the sort of big fish in the space. We have major competitors in the form of Episode and Chapters. Our game is called Choices. It's been out since 2016. We've done very well with it. It continues to do very well, but it's a very competitive segment. Mm-hmm. And to come in at the tail end of 2020 with a new sort of spin or play on narrative, I think it's a very competitive space. It's a red ocean, and you can see that they've not been able to scale the game in the way that they would like, I'm sure. They've achieved kind of a steady state in revenues, but this is not, just eyeballing the graph, like this is not a significant market share in the interactive narrative or mobile fiction space, I would say. Right. And I will further say that these types of games are very expensive to operate, especially if you're doing it properly. If you're doing it improperly, then it doesn't matter. But if you're really like trying to make a go of it, it's pretty expensive, and it requires a lot of expertise. It's not something that you can just jump into with like a match 3 clone or something like that. It's very different. So, I don't know what the prospects there are. It's kind of makes you wonder. They have Lovelink as one of the 9 or 10 pictures on that card you showed us earlier, as part of their SPAC. They're advertising it as being part of their future, and it's like, I don't know, guys. It's tough.
So let's talk about the other potential opportunity for growth, which is M&A. So a couple of things. So they're going to have $115 million in cash to do M&A. That's not a lot, right?
No.
So you're underfunded. And if we look at the history of their acquisition, so Yukin Games, the acquisition of Bingo Pop, this was not a huge, was it publicly announced? I know the number, but I know the number because I know the number.
I don't know.
Yeah. So this was not a big acquisition, but I think it was a good one. And, we're huge fans of the Yukin Games guys.
Yeah, they have a really solid team. So
I'm not even familiar with this one.
Well, you can see that the bookings increased for 231 play or whatever in Berlin.
Yeah.
The bookings increased 21.2 times against Yukin's 1.7 times. So whatever they were doing was like minuscule.
Yeah,
right?
So this was probably something tiny. And then the Disney stuff they acquired as Disney was exiting games. And so they kind of got rid of these titles. I just don't. So the other issue with licensed titles is just the profitability, right? And so I don't personally have any inside information on this side, but I would say that it's hard to be super profitable with these kind of games.
Well, yeah, and you look at what they spun off, right? It wasn't working for Disney, right? So GMC generated a 3.0 times booking increase on some failed properties, right? So that's good, but like, what kind of base was it coming from, right?
Yeah. On the Ludia side, I won't speak too much, but I will say I like a lot of the folks on that team. Mm-hmm. I like Ludia personally. On the other podcast, I had speculated that Ludia would be taken out. I thought Scopely was going to take them out, but it looks like it's Jam City. But we see that, I do think it's a good combination. The Jam City plus Ludia is probably, I would say that the combination itself is good. But in terms of, is the combined entity something that should be public? Is it a growth story? I took this slide from Jam City's deck, but this is the big question mark I have, is that, okay, so we saw these numbers here, right? Like
I'm assuming that giant question mark you added in post, right, Joe?
I did, yeah.
That wasn't part of the presentation.
Okay. Yeah. So here we see like tremendous growth being shown here, right? From the 570 million in bookings to
roughly double, right?
Nearly a double in 1 to 3 years.
Yeah, and keep in mind 2020 was the COVID year, right? So that was supposed to be a great year.
We saw declines in 19, right?
Mm-hmm.
Declines in 19 for both Jam City and Ludia. Then we had the biggest event and year in the history of all of gaming, and somehow they're going to double that. It just doesn't make any sense personally.
Yeah.
Maybe
they're expecting COVID 22. I hope not.
In which case, they got a shot now.
Yeah.
So then, what's the pipeline? Because here's the other thing that they're saying is that a lot of this growth will be coming from new games. So in that scenario, okay, maybe. But then, as we mentioned, LoveLink has been declining.
Yeah.
So I doubt it's going to come from LoveLink. Disney Pop Town, we don't know what that is. We've got an HGTV type of game. I mean, I do think that's a good space to go after.
So they're going after CrowdStar with that, right?
And then there's that Finnish company that's just been killing it. That actually has taken a lot of share from Glue.
Okay.
I mean, it's a potential good opportunity, but they're kind of coming in a little late.
Mm-hmm. And that's also a license, and that type of game is also very expensive to operate because you have to stuff it full of licensed stuff, right?
Right. So what we're talking from a margin perspective with so many licensed titles, we are talking about lower margins, and a lot of licensed titles actually operate at like basically break even. Many of them. That's my claim. I won't go into.
Well, you've done a ton of license deals. You're familiar with how they work. It's like, these specific ones, whatever, we don't know. But we do know that you have to pay a lot in royalties depending on the license. We're talking about very expensive brands here. We're talking about Star Wars and Avatar, right? That's like, you're probably looking at 50-50 splits for that. I don't know for sure, but 40%, 50%, something in that range.
And then these titles here. So the thing I don't like about these titles is like, it seems like Star Wars is getting over licensed, right? They've got the Zynga game. They've got, I think, and so, you got to be careful. There's already a top Star Wars title. You can't have that many mobile games with the same IP on the market. There's only room for so many.
Mm-hmm.
So and then there's Avatar. Is that a great IP? What kind of game do you make with that? I don't know. I'm a little bit skeptical. Like,
when are the Avatar movies coming out? Because I know James Cameron was working on like 8 sequels to the original, right?
Yeah, I mean, I'm sure the movies are going to help, but then in terms of the game and the gameplay, like Star Wars has a lot of different characters. You can do things like Gacha collection against a bunch of different characters. DC, same thing. The thing I'm not so sure is Jam City doesn't have a history of making mid-core, hardcore games. Now, Ludia has more experience on that side, so maybe they're thinking that Ludia will be able to, impart some of that know-how and knowledge from a mid-core, hardcore perspective. But it's not like, but to expect a doubling from this, I gotta think this is likely not to happen.
And let me ask you, Joe, in your experience, when you acquire a studio, do you actually absorb that studio's DNA in any meaningful way?
To the mothership?
Yeah.
I mean, not usually.
Not usually. Right? It's like, it's often the other way around.
Yeah, even if that, I think that a lot of these organizations, especially the bigger ones that are more political, like what we saw with what happened with King at Activision, right? It's like there was zero transfer, right? There's like all of the synergies that were supposed to happen between King and Blizzard Didn't happen.
No, because they don't like each other. And like there was like a firewall, basically, right?
Yeah. And so I just like, I look at this growth, it's like, I can't see it. I don't see it.
It could happen. Like, to be clear, like it could happen, but I agree that
I'll say this: one of these games could make this happen for sure. Like even if just one big hit, but then it is. I would say like the way that I look at it is from a risk profile perspective, like the potential downside relative to the potential upside and the likelihood of upside versus downside, highly asymmetric here to the negative.
Yeah. I'm kind of with you. Yeah, it's like, look, to be clear, Jam City, like, they're good operators. You know, they know what they're doing. They've been doing mobile games for a long time, but this is a risky strategy to take on all these licenses and kind of roll the dice. A great license does not guarantee a hit game. They've done it obviously with Harry Potter, which is great. And I guess they've had some success with Disney as well. So that bodes well too. But I think, you know, one of these may be a success. Two could very easily fail. I think that's the base case. And will it be a big enough success to drive this doubling by, what are they saying? 2023? That's pretty soon. And I get that, like, the mobile games business is like in a secular expansion, like across the industry, but it's like there's a lot of new entrants, you know. It doesn't mean that the incumbents are automatically going to win.
Just to speak to the bull case, so the bull case would be that it's really going to be around IP, that one of these licensed IP games takes off in a meaningful way, at least one. And then that, let's say, if IDFA deprecation then starts to favor IP-based games and just throws a lot more organics and favors games with IP, then a company like Jam City doing so much license relative to other game studios that probably have a smaller mix of license is positive for them. But again, I would say that the bear case is that they continue this kind of decline as they were prior to COVID. Yeah. And that these titles don't necessarily work out. And that if IDFA deprecation doesn't accrue benefits to licensed IPs, then basically what you have is you have a company with a terrible cost structure, lower margins, and and a declining business where they're going to be under heavy pressure to find margin. Yeah. Right. Because I don't think they were that profitable before COVID, if at all. Yeah. So that would be my guess.
I'm with you. You know, thinking about the mobile games companies that we've talked about so far, AppLovin and Zynga, and I guess Skills as well. You know, I see Jam City as being well behind AppLovin and certainly behind Zynga as well, right? Kind of in third place. They're the smallest of the three. They're not going to have enough money to kind of follow the AppLovin playbook for the post-IDFA world, post-privacy world, whereby you buy your own advertising network or you are your own advertising network in the case of AppLovin, and then you acquire a data provider.
Yeah,
and then they can't do that.
Sorry.
Yeah, they just don't have the money for that. Like $115 million won't do it.
Right.
And if you can't do that, I think that's the gold standard when it comes to growing in the post-privacy world, right? And the licensing stuff is kind of it's an end around that. And I suppose it can work in a comparative sense against doing traditional UA, which is going to be much harder in the post-privacy landscape. We're already seeing it. That change was made, I think, 3 weeks ago, something like that. And it's starting to kind of reverberate commercially in our business. So licenses circumvent that because you rely less on performance targeting, right? Like individual targeting and really good individual level data, which just got disrupted, and more on the brand attraction, right? Of having these huge flashy licenses. But we've seen in the past, it's risky. It's hard to pull off, and it's expensive too, you know? So it increases the volatility in terms of what they're trying to do. I would say it would be much better if they had the money to go out and buy an ad network or build their own and then buy or build an MMP. But $115 million isn't going to do that, right? It's going to pay for some licenses. It's going to pay for maybe a handful of smaller studios or something. And then from there, it's like they're looking for growth,
Yeah, I think that's what they're probably going to have to do. But from an M&A perspective, most likely they're not in the game. There's just too many much better financed companies with a better story for acquisition, whether it's Zynga, Stillfront, Embracer, all these other organizations out there.
Yeah, that just have a ton of money, right?
So and again, the mid tier is pretty much hollowed out. So they're going to have to go either up, and they don't have the money to do that. So then they're going to have to roll the dice and bet on earlier stage companies, and hopefully one of those pay out. Zynga had that strategy before going to later stage companies, and that's when Zynga was terrible, right? Like all of their acquisitions failed during that time.
Well, let's invert this and ask, okay, if they can't do the acquiring, can they instead be the acquired? And in fact, is that what this sort of deal is about? Keep in mind that Jam City is, I think, 60% owned by Netmarble, which is Chinese, right?
Yeah.
Do I have that right? Yeah.
No, Korean.
Korean, excuse me. Korean, gigantic Korean gaming conglomerate, entertainment conglomerate.
Yeah.
And so I think Netmarble acquired that interest back in 2015, right? And I don't know how much they paid for a controlling interest in Jam City. And that investment has grown to a certain extent, right? But if I'm Netmarble, I'm kind of looking around, figuring out what I'm going to do with this asset, right? In post 2020, I started hearing word or rumblings about Jam City going public back in 2018. But looking at the graphs above, it's clear that they didn't have the growth to support that.
Yeah,
right?
I think the game started to crumble, and so then they missed their window to IPO.
They did back then, and so they caught a draft in 2020, making everything look better, right? And they can go public via SPAC and raise a little bit more money that way. However, if I'm Netmarble, this represents almost like a spinoff or of my investment. I retain, I guess, control of the new entity, the new publicly traded entity, and it either goes up or down, right? Any remaining upside is going to be compounded by any money coming in from the raise and then on the open market, right?
But I do think that that's a good point. Like maybe as a combined entity, they may be more attractive to. And what we are seeing is, consolidation by entertainment companies potentially and increasing in the future. So whether it's an Activision, a Disney, a Netflix, a company like that may look at this new combined entity and try and acquire the entity. So I think that if you're investing in the SPAC, you're either hoping for one of these new games to hit, which I think is a pretty big gamble, or you're hoping that they just get acquired and you get a premium against the takeout.
But if I am an acquirer, right? So you were saying there's no mid-range companies left that Jam City could pick up. Jam City is itself a mid-range company. So if I'm a Zynga, right, I might actually be looking at Jam City, but I'm not going to buy it now. I'm not going to buy it at $1.2 billion. I'm going to wait around and see if it goes down to 900 million, right? 800 million. And then I'm going to do it. Because then that's an attractive price. And, I'm not going to wait to see if one of these licensed titles hits, right? So.
Yeah. And then in terms of the transaction itself, maybe a couple of things to point out as we mentioned, 1.2 billion post-money enterprise value. One thing that was interesting is here, the note that in addition to committing to invest in the PIPE, DPCM sponsor has agreed to forfeit 1.875 million founder shares and subject 4.2 million founder shares to vesting at $12 and $15. The assumed value is $10 per share. So I do think that
What's the
Seems
upshot?
like the sponsors kind of like backed off a little bit. So I do think that in the current environment with so many SPACs trying to get to market, not making it, that they probably did a little bit of negotiation with Netmarble to get like some of the reduce some of the promote and things like that. So, I mean, I think that's good. I think from a valuation perspective, relative to other companies, it's probably relatively not super crazy, as we're seeing with valuations for whether it's like skills or
right?
Yeah, or AppLovin for that matter. But I do think that from a growth and profitability perspective, I think that, you know, don't get too excited. There are reasons why it's not, why the valuation is
exactly
a little bit more reasonable.
AppLovin has a better story and better performance. Skills has a better story, but you know, no performance as far as we can tell. And Zynga has a better story and better performance, right? So if I'm advising somebody to invest in the mobile game space, am I going to advise them to invest in Jam City? You know, when those other names are available, I'm not sure, right?
Yeah.
I don't know that it makes a lot of sense. It seems more like a play to facilitate M&A from like Netmarble's perspective more than anything, right?
Maybe we could end on just high level. What are your thoughts or predictions for Jam City over the next 1, 2, 3 years?
Yeah. You know, as I said, I think Jam City is well run. And I like the people that work there. I think they have a good team. I think they're solid operators that have done well. But I think that they're unfortunately in a little bit of a pinch point. Like kind of in the, like, I don't know, I would call it like a reverse Goldilocks scenario, in that they couldn't really move to get much bigger than this, right? They kind of missed their window to do that. They were not able to grow past the point where they could really start to acquire a lot of studios in quick succession, and kind of become perhaps the next Zynga. They never quite got there, right? Nor have they joined Zynga, right? And gotten that payout, right? So they're kind of left in no man's land, and kind of left up to their own devices. You know, they missed their IPO window, which is what you said earlier, right? This is a form of IPO, sort of, right? But it's not the way they wanted to do it. I don't think. And I don't know kind of where the price is going to go immediately after that initial offering. I hope it goes up because I like the guys who work there and I want them to cash out and do well. I want them to have a nice exit. I just, you know, I worry about it, right? And as far as whether or not I personally am going to buy Jam City once it lists, I will not. You know, as I said earlier, I think I'm long Zynga, and that's my play. I would invest in AppLovin as well, but I do not for other more personal reasons. And that's kind of, you know, my pure play mobile investment right now. I don't think Jam City is going to join it.
Okay. Yeah, I'm also negative, but you know, I'm actually negative across our sector. Right?
Okay.
So I'm negative Zynga, AppLovin, Skills. Like I'm negative all of them.
That's troubling. Do you care to say why?
Well, I mean, we already covered those companies, right? But I just think that, I mean, we had a great year last year, and so comping to last year is going to be difficult. And then most of the growth for public companies through M&A, who are you going to acquire? But basically, I think that this is what Jam City becomes, is they become a target. So to your point, I think, so they, this thing actually, it goes, I think, I don't know, I think they're going to be challenged to achieve the growth targets that they've laid out for themselves. And I think that, hopefully they prove me wrong, but assuming that's the case, then I think that the valuation of the company, the market cap drops to a point where then at some point, because all these other companies are starved for growth, right? Zynga is looking for growth. the Stillfront guys, Embracer guys, all these guys are looking for growth from somewhere. So then I think they just get taken out by somebody once the valuation gets low enough.
Would you care to bet on who might be eyeing the tasty morsel that could be a publicly traded Jam City?
I think it might actually, so to the point I made earlier, I think it might be one of these other entertainment companies or like a non-mobile game company that wants to get into the game.
Okay.
And
so
this
Netflix
or Netflix, Disney, Activision. I don't. So I think that's what may happen, but well, we'll see.
We'll see. And I mean, they've done business with Disney, so they're familiar with one another. That could make a lot of sense. Both LA based, right? Mm-hmm. Which is nice. Activision, they're active in mobile, through Blizzard and also Call of Duty, right? But that like, how much do they really do in mobile compared to like all the other stuff that they do? I don't know.
I mean, for Activision, I think a company like Zynga makes more sense personally. But
right. They're big enough that they can actually go after Zynga and add them to King, right? Like, why buy the sort of number 2 competitor to Candy Crush, right? It doesn't make a lot of sense to me. So I'm with you.
Okay.
Basically, yeah.
Cool. Well, folks, I think that's it. There you have it. Those are our thoughts on Jam City SPAC. Hopefully, let's cover something more positive next time.
Yeah. Sounds good, man.
But we might have to cover something outside of our industry because I think right now it's a little bit challenged.
Yeah.
Or definitely. we could cover like Roblox or something like that.
We've gotten some requests for Roblox. I've read that S1, so maybe we'll go there. I'm along Roblox, so I'd be happy to cheerlead that.
Cool.
Yeah. Awesome, man.
All right. There it is. Until next time, everyone.
Until next time.
Bye.
Bye.